Good afternoon. This is Jonathan Satofsky of Satofsky Asset Management, August 23rd, 2017, providing a video blog update. And today I want to talk about mission. We've been on a mission for the last several decades to try to create abundance for those that we've been fortunate to serve. And we've sought to do this by combining financial planning and investment management and by understanding someone's balance sheet and cash flow and listening to their goals and circumstances. If we can philosophically align the right structure and mindset, we can make the impossible possible in achieving someone's goals and lifetime dreams. And it's important to continue to monitor and adjust this structure because life expectancies are expanding. The number of people living beyond 100 are increasing at a rapid rate. So people aren't just planning during a traditional 20-year retirement time frame. They might be planning for a much longer stretch of time, if not just for their own lives, for multiple generational lives. So with that, I need to address the obstacles that people face as they contemplate how to think about abundance, how to create abundance in such a volatile world. Well, the greatest concerns that people have articulated to us in the last several months have been concerns about a ticking time bomb in Trump creating a tweet or a misstep that may cause the financial markets to drop materially. And the other concern is, are markets too high? Are markets just bound for a decline? And it's not surprising that people would be thinking this way, because if you look at the last several decades of market returns, we've had boom, bust, boom, bust, boom. And so people are just waiting for the next shoe to drop. But I would surmise that it's not as much in the hands of the president as I would surmise that with the Federal Reserve Board in the US and Europe, Mario Draghi meeting in Jackson Hole. The bigger concern in all eyes are on the Federal Reserve and how they control the balance sheet and money supply. And this has had a much greater impact on business conditions. And if they contract both the balance sheet and money supply too quickly, you can very quickly see a retraction in security prices, which would be very disruptive. But I need to remind people, regardless of what the short term may happen, I should remind people of the wise counsel from Warren Buffett, is that the stock market is a device for transferring money from the impatient to the patient. Now, I've just shown you a graph of the US and foreign markets, but I'll show it to you in a little bit of a different context. The last 10 years, the US markets, even with the crisis of 2008, 2009, have achieved almost 7% a year returns. And the foreign markets have achieved 1% a year. So it's very hard to be patient if you see other people achieving great success in some areas. It's hard for people not to chase returns. Now, people may have get this more extreme if you look at the spread between growth and value in the US, where growth stocks have achieved 3.5% a year returns higher than value investors. Energy investors, for example, have had negative returns for a decade. Financial firms have been not far behind. But even emerging markets have achieved all but 1% to 2% a year. So this year, we've actually finally got a period of outperformance of foreign markets. The international markets have done a little bit better. So when people talk about valuations, the US has zoomed ahead primarily because earnings have done very well. So if you look historically over the last 25 years, valuations are much cheaper outside of the US in the foreign and emerging markets. So if you're a value investor, you should realize that every setback is an opportunity, particularly if you're looking at it over a longer period of time. And why a longer period of time is critical is even though volatility isn't theoretical risk, volatility does impact people's behavior. And you can see the more equity exposure that you have, the more downside volatility people are exposing themselves to, which is fine if you understand your temperament and you have the wherewithal to stick with it over a longer period of time. You can minimize that downside risk and pain if you're thinking about it and stretching the timeline. And that's critically important to be able to minimize the behavioral mistakes that befall most investors. This isn't about active or passive or the cost of the investment. This is about structure. And that's critically important to be able to achieve long-term success. So I'll leave it on the final note that the end of August, many people take vacations and holidays and rest and relax. And I think that's really important to be able to quiet the mind. I've been learning personally to quiet the mind and meditate, and I happen to stumble upon this, which is a bit of wisdom that is outside the confines of traditional finance, but may help people contemplate over the final weeks of August and into Labor Day. And looking forward to an abundant future, regardless of what the short term may happen, if we can all quiet our minds and look for the abundance and beauty in the world. With that, have a wonderful rest of your summer.